what is important for SMB owners to keep in mind when they're preparing their taxes this time of year?
Yes. Okay. This is such an important topic. So first things first, I want to acknowledge that taxes feel scary and confusing for a reason. Straight up, the US tax filing system is complicated for a reason. People pay more in taxes and penalties than they need to, oftentimes just to make the problem go away. The IRS is also a revenue generating organization. They're bringing in over $4 trillion a year. So there's an incentive for governing bodies to make the system hard to navigate for business owners because they generate revenue from this complexity. Mm-hmm. So in short, the system is rigged, and it's worth calling out this is not business owners' fault. The system just isn't great for supporting people to do what they love. And there are very real consequences to doing this wrong. And this is how business owners fall behind or pay way more than they need to. Entrepreneurs fall through the cracks because the IRS wants you to. So a few things I would call out for this tax season for any business owner watching this. If you're doing it yourself, you're going to need to make sure that you understand at a minimum what is expected of you, what forms to fill, what to pay, and when. Then to make sure that you're not paying more in taxes than you have to, make sure you're capturing every single transaction from 2023. Yes, even that Amazon purchase that you made for your home office on your personal credit card, because that's a deduction. Mm-hmm. And if that sounds like a lot, please know you're not alone. Yep. Most business owners try using a DIY software when they start the business, even if they don't know the first thing about bookkeeping. And this is the default because, again, accountants often don't want to spend their time doing the bookkeeping every single month for small business owners.
Yeah, and it's so powerful just to get it set up initially and run everything through a credit card that connects directly to your bank account, obviously, and runs directly in your bookkeeping services. Don't be paying everything with cash, that's for sure.
Absolutely. Yeah. Keep those records. Also worth calling out, there are some dates that you need to be aware of. So if you're an S Corp or your partnership, March 15th is the deadline you should be planning for. And be realistic about how much time it takes to actually go back and complete your 2023 bookkeeping, whether you're doing it yourself or you have someone else doing it for you. If you're a sole prop or a C Corp, April 16th is the deadline that you're working against. That's also the date that your quarterly taxes are due if you are paying quarterly taxes for your business. And if you file an extension, if you're planning to file an extension, you still need to file those forms by those March and April deadlines. Yep. And you still need to pay that day because filing for an extension just pushes that filing back. The estimated payments are still due on either March 15th or April 16th.
Yep. And I guess what other kind of pitfalls does the IRS have set up that a lot of businesses overlook that gets them into hot water, so to speak?
Yeah. So I see these missed every single day when I'm speaking to small business owners. Some common deductions that are just missing are merchant fees. So if you are working with a merchant like Square or Shopify or Stripe or Amazon, you'll notice that they're often taking their fees before depositing that revenue into your bank account. Wow. That means that you're only seeing the net revenue that they've collected on your behalf hitting your bank statement. So you actually need to go in to that merchant platform, download those reports, gross up your revenue, and then capture their fee as a separate merchant fee expense. That's 100% tax deductible. You need to make sure that you're capturing that so you get that deduction, and also so you don't risk under-reporting your revenue, which is always a red flag to the IRS. Another one folks miss out on all the time is interest. So the interest that you pay on a loan or a line of credit or your credit card, that's actually tax deductible. That's 100% tax deductible. So let's say you're paying $5,000 to pay down that loan this month. You want to make sure that you're splitting that transaction apart into how much is paying down that principal balance owed versus how much is just interest. And we know that they love to charge a lot of interest. And make sure you're capturing that as an interest fee expense on your income statement. That's going to reduce your tax liability.